Welcome back. You're listening to Houston Real Estate Radio. I'm your host, Shannon Register, and every week we bring you news and information you can use on your next real estate transaction. I've got Angelo Christian here in the studio with me today from CHI Mortgage, and you have been on the show before, and I know you're going to be joining us when we're out on location in the Woodlands, so that's exciting. Yeah. So I have this, every week we always allow people to call into the show. If you've got a real estate question, that number is 281-882-8088. You can always call into the show, and anytime. Doesn't have to be between 11 and noon. We just air it between 11 and noon, but you can call in anytime, leave your real estate question. And we actually had someone who emailed me a question. So I want to address his concern because he had a very valid concern, one that I really hadn't thought about and want to talk about. So Dave, one of our listeners, sent us an email. And he sent it concerning the January 4th show that we did that had Dr. Jim Gaines from the Real Estate Research Center out at Texas A&M University. And Dr. Gaines, it was a show on the economy and just kind of projections for the 2015 year. And so this is what Dave wrote. He said, going back to episode 122 on January 4th, there are people like me who are stuck in rental properties who would like very much to purchase a home. However, he says he earns $40,000 a year. He's single, never married, no kids. He has an 800 FICO score, which is good. He carries no debt, and he cannot find a home that fits his budget. Home buying is seemingly out of reach for him, and there's really no reason for this. He says, I work, I give back to the community, I have excellent credit. I can only imagine that there are many other people out there in Houston like myself. And Dr. Gaines mentioned that most homes currently being built are in the 200,000 plus price range. Right. And I had asked Dr. Jim Gaines on that show, why don't these renters go out and purchase a home, because rental prices had gone up so much. Why don't they go out and purchase if they have the ability to purchase? And he says, he's one of these people who he makes $40,000 a year, has an 800 FICO score, he's debt free, and the lenders won't lend him any money without him putting a large amount down and putting his payments at a price point that he's not really comfortable doing. So he says he can get a car from a car dealership with zero down on an auto loan, but even if he wants to buy a home for $100,000, he has to put 20% down, and he doesn't feel comfortable with that based on his cash flow. So he says, there must be other people out there like me who want to buy a house that are renting, and how can he fix this? How can he get past this? Yeah. So Angelo Christian is joining me. He's with CHI Mortgage. So I'm going to let you address this.
I've actually, when I got the email from you, I think it was 2-3 weeks ago, I started thinking about this because we see this, rampant in our industry, probably several hundred people a week with a very similar situation. And so the two things that come to mind are government loans and subsidized housing.
So FHA loans?
FHA, USDA. So, with USDA and FHA, let's just look at USDA, for instance. It's zero down, 100% financing. And through the Department of USDA, they actually have subsidized loans for lower income. So they actually base the repayment of a loan on the person's income. So in this case, he could qualify for the $200,000, and the actual mortgage payment would be a function of his income. So they adjust the payment. Okay. That would be a very good idea. With FHA, it's 3.5% down, and they have a higher debt ratio tolerance. They can actually go up to about 55% debt ratio, which is about 30% higher than what a bank will allow. Okay. So with that, he could qualify for more house. Okay. And so yes, the cost of building is rising, the cost of living is rising, but wages are not rising equally. Right. So those two routes would be wise and probably the most accessible. The subsidized loans are a phenomenal program through the USDA directly. So it's a loan directly through the government. And so that would be my recommendation, to look at either one of those. Going through a bank, yes, 20% down is not feasible for a lot of people. Yeah. So I would say either FHA or USDA would be an answer.
Well, I love the USDA because you can go zero down. I mean, it's a great loan program. It can be limiting depending on where he wants to buy.
Correct.
Because the property has to qualify as well. So he may, depending on where he wants to buy, he may not be eligible. But then there's the FHA, which you can buy any property as long as it's in a livable condition.
You can. One thing I want to add about the USDA, you can also have a home built. So a brand new house, new construction, directly through the consumer. Okay. So that is a wonderful thing that is available as well. And so I would definitely check out the USDA loan if people are in this type of situation. And so, but it does matter. There are geographic restrictions.
Why do you think he has only been told he can get a 20% loan? That sounds like a conventional loan. He didn't say that, but it sounds like a conventional. Why do you think that whatever lender he went to, let's say a bank, for example, why are they not posing that he get an FHA at 3.5% down?
Well, it could be a possibility. I can tell you that most banks don't do, for instance, USDA. It's probably just a handful that offer USDA. Like we specialize in USDA.
Okay.
Now, FHA, it depends on who his lender was. Smaller community banks usually are not approved to do FHA. The bigger banks are, like Chase or Wells Fargo. Okay. So it depends on who his bank is.
Okay.
A lot of them do they do push for conventional because the profit margins could be higher for that bank to do conventional, or maybe the loan officer makes more money. I don't know all the details with who his lender is. So, and also probably because his payment theoretically would be cheaper if he's putting 20% down versus 3.5% down.
So maybe he was wanting to go that route to get a cheaper
It's possible. We need to get a little bit more of the details to see how they arrived at that. But I do know for sure that with FHA you'll have a much higher purchasing power over conventional, and with USDA it would also be another really good route to look at. That would be my thinking, just to kind of hit that home. Either a subsidized loan or FHA would probably be the best way to go. Okay.
Any first-time homebuyer programs out there that you would recommend?
Well,
I know there's a lot of them, but they change constantly. They're hard to keep up with.
So 90% of the people that do USDA are actually first-time buyers. There is a conventional program that just came out that through Fannie Mae and Freddie Mac, that's 3% down for first-time buyers. So that would be a really good program. Through the state of Texas, there's the Bond 79 loan, where you can get 5% down payment assistance to cover your closing costs and down payment. That would be a really good way to go.
So just Google it.
Well, you can just give us a call, and we do that. So we do that. So I mean, if you're a first-time buyer and you haven't owned a home in the last 3 years, and you meet the requirements, you can get the down payment assistance. It's basically a grant to buy a house, and so that would be probably the best first-time buyer program to do.
Okay, very good. All right, so Angelo, anyone who's in this situation where they're renting, they have good credit, they just don't have a lot of income, and they want to buy a house, they need to call you to qualify.
I'd definitely say to give us a call just to see what your options are. You definitely need to see whoever you work with, you want to make sure they know what they're doing and that they're legitimate and reputable. I say give us a call and definitely find out what your options are.
So I think that sometimes people feel like they bank at their bank and they need to get their loan from their bank because that's who they know.
Sure.
But like you said, banks can be very limiting.
Right, and so I appreciate them wanting to be loyal, but sometimes, in some cases, they don't offer the best program for you. Definitely check with your bank and see what they have, and if they have what you're looking for, take it, but also always explore your options. Yeah.
So tell us how to find you online.
Okay, so it's chihomeloans.com, or you can give us a call at 888-202-4479.
Okay, and if you missed any of today's show, you can go to HoustonRealEstateRadio.com, watch the videos if you missed any of this. We are basically trying to help consumers today who are in a rental situation, but they want to purchase, but they feel like they don't have that buying power because they don't have, they don't make over $100,000 a year in income or over $60,000, $80,000 in income. And so we're talking about programs that can help them to be able to purchase, first-time buyer programs, USDA loans, and FHA FHA loans, getting some help with those to be able to purchase the house that you want, not just a house, but the house that you want.
Right.
So I think that's real important.
Right.
Thanks, Angelo. We appreciate
Thank
your
you.
feedback. Great information. If you've got a real estate question, you can call in your question, 281-882-8088. We'll be happy to answer it right here on the show, 281-882-8088. Or you can email me like Dave did. I don't mind if you email me as well, but you can always call in your question and we'll air it on the show and answer it right here on the air every Sunday between 11 and noon on Houston Real Estate Radio.